Hi everyone, this is a technical analysis on GBPUSD. Let's start with some fundamental background first. The US NFP last Friday has finally missed expectations for the first time after 14 consecutive beats. The other details in the report, though, were almost all good, and the average hourly earnings ticked higher, which is not what the Fed would want to see. In fact, the NFP report didn't change the market's expectations for the next FOMC rate decision, and a 25 BPS hike is still basically priced in. Conversely, the UK employment report this morning missed expectations on the jobs side, but saw another upside surprise on the wages side. This should keep the BOE on track to high interest rates, and the CPI report the next week might decide if it's going to be a 25 BPS increase or another 50 BPS hike. Now, looking at the daily chart, we can see that GBP USD, since bouncing on the red 21 moving average, extended the rally past the 128.47 high and is now looking at the 130 handle. At the moment, there's no clear resistance level for the sellers where they can lean on to, and therefore it's a buyer's market. The price would need to fall below the 128.47 high to see more sellers piling in and target the trend line. On the 4-hour chart, we can see that the buyers land on the previous win high level and the red 21 moving average to start a rally towards the 130 handle. From a risk management perspective, the buyers should now wait for the price to pull back into the 128.47 resistance turn support before engaging in new long positions, as the price has now overextended a bit. On the 1-hour chart, we can see that we are starting to see a divergence with the MACD, which is generally a sign of weakening momentum, often followed by pullbacks or reversals. In fact, as mentioned previously, a good spot for the buyers to enter new long positions would be the 128.47 level, where there's also the red 21 moving average for confluence. If the price falls below this level, the sellers will start to pile in and target the 127.50 level first and then the 126 handle. Tomorrow we will see the latest US CPI report, which will be the main event of the week. Higher than expected figures, especially on the core numbers, should support the USD as the market will price in a more hawkish Fed. Conversely, if the data misses expectations, we should see a weaker greenback across the board in the short term as the market will price out the probabilities of more hikes and even price in rate cuts. After the CPI report, we will finish the week with the US jobless claims on Thursday and the University of Michigan consumer sentiment on Friday.